Okay, I think we are live. I'm gonna see from my mobile phone to make sure that the stream is working all right. Okay, so I'm looking at the linking live event on the mobile phone. Yeah, seems to be running. Test. Testing. Okay. Yeah, linking size all right. Test the YouTube site.
Okay, we are live.
You know whether the YouTube one is working properly. It just doesn't look. Yeah, seems to be working fine too. Okay. Okay, let's start. Hi, welcome to the July's market review. So let me switch off the music. So I have about almost 20 years of experience in the financial markets. And all the way to the recent years, I'm involved in commodities, stocks, indices, crypto, forex. So these are the multi-asset classes that I'm comfortable to trade or invest in. The structure for today will be we'll spend like a couple of minutes for a quick intro. Then we'll review my positions. Then we'll look at some what's interesting in the markets. Then open for any questions on what you'd like to have a look at. All right. So I have almost 20 years experience in the financial markets. My approach 去找妈妈宇轩，爸爸现在在 meeting。My approach in the markets is based on technical analysis, basically analyzing the price, action, and behavior from the chart, and from there determine where the market is heading. There are other components like quantitative analysis and fundamental analysis, but those generally are not that accessible to retail investors and traders because you need a very good quality data to complete data as complete as possible to form quantitative models of the market and so on. And for fundamental analysis, you need the access to those data and enough manpower to read through all those fundamental reports as well. And as a retail investor or trader doing it as a hobby over the weekend, you probably can't do it as well as institutions, right? It just doesn't really work that way. So that's why a lot of successful retail traders and investors, they tend to use the technical approach. Yeah, so that's what I found, because there is the angle where there's sort of a level playing field of a source data, your historical price data. For me, for any retailer, we have the same historical price data as the largest investment banks, the largest hedge funds, right? So that's sort of like a level playing field. But even then, it's just one component of the whole holistic view of the market. So I think it's fair to say that without that complete view, we probably won't get the best prices. But if your time frame is long enough, generally that's okay. The edges that the institutions and the hedge funds have will not be that much of an impact if we are looking at a longer term time frame. And there are spreads, there are commissions which are better than us, would not be that much of an impact. Yeah, so that's how it goes, right? So why I'm doing this is how do I share screen? Let's share my screen. So why I'm doing this is because I think when I share, I get to learn myself as well, understand more about myself, and be a better investor and trader. And when people point out certain asset classes and certain interesting stuff, it might uncover certain blind spots. And I give an example. So I used to have 9 guidelines on how to approach the market, but over the years, I reduced it to 7. And recently, I was sharing with my ex-colleagues about how I always look at the markets. And when they were asking me about a particular guideline, I find it very hard to explain and substantiate it. Then after the sharing session, I went back and tried to think through all my 20 over positions made in the last 3 years. I find that actually none of them require that particular guideline in the decision-making process. So that was a surprise to me. And because of that, I took out that guideline and I'm left with 6. And that was a big win for me. Yeah, and it wouldn't have happened if I hadn't do a sharing and I had the kind of interactions with people. Yeah, so I think that's why I like to share. And I like to share for free. I'm not gonna. There's no follow-up courses. There's no follow-up books or consultation. Nothing. Right. I do not believe that anyone who try to sell a course, a book, on consultation on trading is really doing that well in the market, right? I mean, the person probably can make much more money in the markets directly with his time or her time, rather than going through all the effort of marketing, production, support of a training product on the financial market. It just doesn't make sense to me. I don't think it worked that way. Yeah, but for me, I'm making comparable amounts as my full-time so far this year as my full-time investment banking vice president job. I've recently left the investment bank and will probably want to look for a tech role outside of the finance industry. Yeah, so that I'm no longer constrained in my personal investing, the various constraints and restrictions by being in finance. For example, you can't short the market, you can't cut loss within 30 days. So amongst other things, so there's a lot of guidelines which go against fundamentals of investment and trading. Yeah, so that's the background. Okay, so let's look at my position. So in the June review, I covered the entry points and the rationale for my positions, most of them. So now I'll start off with a few positions that I have which I didn't cover. Okay, let's look at Singtel. So Singtel was a position I made last year. I think I'm sharing screen already. Let me just double confirm on the LinkedIn to make sure the screen sharing is all right. I'm just checking from my phone. Yeah. The screen is all right. Okay. So Singtel, let's have a look. It's Singapore's, I think, 4th largest market cap company. Last year, I was bullish on the Straits Times Index and I got a position. It was a defensive position on behalf of my wife. You want to take a chair and sit here? And I want to get some defensive positions for her. Yeah. Right? And then I thought the Straits Times Index, things like Singtel.
I might need to go to the toilet.
You can go first and come back look for Papa, okay? And go first.
If you just scared without Papa.
No, you ask Mama first. I'll wait for you. Go first. Sure, I'm in the middle of a meeting. Quickly, quickly go first and come back. Yeah, Shu. I'm so sorry. One moment, please. Papa is in the middle of meeting, right? actually can't stay here for guys and nobody要 meeting 哦，谁来 meeting 你就要 talk to you stay here go back to the living room Is it too high? Is it okay? Yeah. Alright, so sorry. Yeah. So in the last couple of sessions, in June and the one from May, my kid has a Chinese weekend class, so I could use that 2-hour period to try to do my sharing. But now it's the summer holidays, so there's no longer all those weekend classes. Yeah, so she's at home and I'll try to manage. All right, so sorry about that. Okay, so Singtel chart. Let's have a look. The chart is not available. Seriously? Oh, this was what a joke. I mean, Yahoo Finance is a free provider, right? So they probably don't have SLA. Yeah, let's look at whether it's working for some other stuff. Don't tell me the whole Yahoo Finance is down. Seriously. Let's try. If everything is down, I need to find an alternative chart provider. Let's say FTSE, is it loading? No, chat is not available, seriously? That's not very good. Then how am I going to run the session today? It seems that the chat is just simply not loading today. Let's see whether we have a backup. But it's not ideal, but let's see. We can use the international version. The international version is also not working. That's such a pain. It was still working yesterday when I had a look. Seriously, it's not technical glitches, just ridiculous, right? Okay, Chrome. I mean, last resort, we can use TradingView or IG Market, but it's not ideal because that's life, right? Yeah, it's definitely down. Not specific. It's just Yahoo Finance just refused to be working today. TradingView, I'm not familiar with it. Anyway, just try it and I think after you draw a few lines, you complain to register account. But I don't have a better alternative. Yeah, just go for TradingView. Singtel TradingView. It's a bunch of hiccups already this morning, right? Okay, Singtel. Let's do some basic settings. I prefer log chart. Let's say I just go for a monthly time frame. Okay. I don't really need this info. So not ideal because my plots are saved in Yahoo Finance, but it decides not to work today across different browsers. So that's fine. So can you see where this horizontal line is? You can see that, around 240, price has a problem breaking down. And over here, during the pandemic, price went down. This area here, maybe it's better I draw a line. Something like that. So you can see that price trade below here, then went up. To me, that's a clear, it's a 18-year chart, by the way, 17-year chart, by the way. To me, it's such a clear rejection of the breakdown that when the price start to, test the line and bounce again, I bought here. I think somewhere here at this candle, right? And it took about a year, 1 year, 2 months, and 3 months. Then it went up. It started to accelerate the price appreciation. I think it's making, including dividends, around 30%. But for most part of the 1 year plus 1 year, 2-3 months, my capital is like put to waste. It's not very efficient. Yeah, I'm getting dividends, yes, but it's not very efficient. And I suspect for the hedge funds and the institutional traders, with their more holistic view of the market, they might not want to enter where I enter here, right? At this kind of, and they might enter somewhere here, and then they have a much more efficient use of their capital instead of earning just 5 to 8% dividends over a year. Yeah. Anyway, that's just my speculation. They might enter this year, a few months back, rather than what I did last year in April. Okay, so that's Singtel. Now that this line is not so important anymore, I think what's more important is this line. You can see a clear, uptrend channel, and price is actually trading above this line right now. Measure target. One more line. I think very soon you'll ask me to sign up account. I already hate that. Just want to remain anonymous. Okay. So I think it's given that it has penetrated quite deep above this line, the chance of a forced breakout to this zone is low. And I would think it's reasonable to expect a continuation of rally towards hitting 3.5 or 3.6 here, somewhere here. So I'll wait then. But another consideration you have is this one. Notice that if I draw this line and let me remove the other lines. I don't use TradingView, by the way. I just use Yahoo Finance, but I know that TradingView is popular. I mean, I'm quite familiar with charting, right? So I can just open a random app and I can draw. I can use it as well, but I just don't use it. So I'm not familiar with the interface, but I know like you can change the time frame here. You can you can change the log here. Yeah, that's enough. So notice that these two lines are sort of like the bounding line for the trading range for a number of years. And the price is starting to break out very, very, very late into this point. That's generally not good, right? Because if something is bullish, you would expect price to break out much earlier. Because the market participant would know that it's bullish and they'll form a view. And that's the thing that's really irritating. They'll form a view, and they will tend to beat up the price much earlier rather than waiting for the last minute. So I suspect for this Singtel stock, you continue to rally up, but it's not going to hold on to its gains, and you'll fizzle off and maybe lose all the gains. I suspect, but so I'm not going to hold it for long term. I'm going to get out when it has reached a reasonable reward for the risk I've taken. Yeah, so yeah, that's the part where join for free. But I really can't continue this with all this thing keep popping up, right? So I just maybe I sign with Google. Yeah, otherwise you keep interrupting the sharing. Confirm your sign in as Ken. Okay, so I have an account. Great. Next, STI. Straits Time Index. That's the stock index for the Singapore market. It's quite sad, like, because it's going sideways for the past since subprime, 15 years. You know, for any investor, you'd be probably quite sad just collecting dividends. It's not going anywhere. There's no capital appreciation. Whereas you compare to India stock market, it has gone up. The value has gone up 3 times that of during this pandemic low. So it's such a great bull market, but for Singapore market, it's not so good. Okay, let's draw some lines. Okay, so this is how I see the dominant lines here.
I like to play it like that.
You probably can draw another line here.
I want like white.
Yeah, probably something like that. It could be a fair line. So, in general, you can see that you know, this was a subprime. There's a clear rejection of price being to continue trading in this range. They reclaim it to start to trade. So generally, the story of a Straits Time Index is that it's trading between these two lines for most part in the last 15 years. But there are a couple of occasions where price tried to break down and trade below, and it failed. And this was the Corona virus pandemic. Break down and this went up. But so you can see a clear rejection of price being trading below. Whenever price drop below, it's like it gets a buy up because there's a clear sign of value to the market participants. But it's just lack the extra, bull spirit to just break out through the upper line. And I think it's now trying to break out through the upper line. And over here, there's a forced breakout. Then you have a bad fall. But here, notice that when it's trying to hit the breakdown line here, it's just selling, yes, but the price is holding firm, not even dropping to touch the line here. And now it's doing a breakout. I suspect the odds of a successful breakout would be more than 50, given the whole setup here. There's a lot of prep work done here to try to hit the line and clear all the sellers. Yeah, so I'm a bit surprised it started to move up. Where did I buy? Can't remember. When I bought it was somewhere, probably somewhere here. Yeah, probably somewhere here. So I probably bought somewhere here. So it's up about a few percent, I think. Plus dividends, it was small, maybe 10%. I'm not sure. Yeah, but that was a defensive position I've gotten because my wife want to invest some of her money. Yeah, I myself I won't buy STI. It's too safe. I mean, it won't drop much. It won't go up much, but it's easy to explain if this trade doesn't turn out well, right? It's defensible to buy this. SGX, Singapore Stock Exchange, at 68. Okay, yeah, we see a log graph. Yeah, so let me check if there's anything. So, this Singapore Airlines, great. Singapore banks, okay. Let's have a look at those. So, this is quite a nice chart to me. You know, you have a roaring bull markets in the early 2000. You know, went from $1 Singapore dollar all the way to 17. Yeah, I was like literally seeing it happening in front of me. I started investing trading in 2007 here. Yeah, so it was the last leg of the bull market before the subprime crash happened. So over here, you can see there's quite a clear rejection here, and then price went up. Then if you zoom in here, there's somewhat of a rejection here, then price go up, but it still lacked the bull's drive to push price up. But I think things are improving. Neither does it have the ability to fall below the line. Let's maybe look at the weekly plot. Okay, I think generally it is moving fine, having a good shape. It's a bit of a concern that Straits Time Index and Singtel is already breaking out on the upside, but SGX still lagging. So that's a bit of a concern, because generally leading stocks would be ahead of the market, you know, relative to the benchmark index, relative to other, you know, stocks in their category. So it's a bit of a concern to me that SGX is still lagging. But we'll see. It's not bad, but its movement is a bit lackluster. I think it's about 10% gain, including dividends, but it's still a gain. It's still a defensive position, but you know, that's what I meant by when you just look at price technicals alone, you might get a good price, you might still make profit, but maybe if you're a hedge fund or investment bank, you might not enter where I bought, which is somewhere, probably somewhere here or here. Yeah, you might have not bought here. You might have bought just a couple of months back, based on your modeling and your analysis of the fundamentals. Like last year, it wasn't right to buy yet, you know, and you might want to buy this year. Then you won't waste 1 year of your capital earning just 5 to 8% of dividends. Not as bad, but I think you know, there can be a more holistic view of arriving at a view, but it's just that for the average retailer, you know, as a weekend hobby, you don't have access to the raw data that they have. Second, you don't have the resources, the compute, and the know-how to actually make use of that data, and time to actually try to digest the data. It's a weekend hobby. So, I mean, the best, at least for me, is to just continue to do well in what I'm doing, the analyzing the technical part, and by picking a time frame that's long enough, then it's good enough to still beat the average hedge fund in the last few years. Of course, the best hedge fund, I can't beat them. I mean, they're really good, but the average hedge fund, even with 50 people headcount, I'm beating them a lot in the last few years. So I wonder what they're doing. Yeah, they are PhDs, they're specialists. Are they sleeping on their job? I don't know. But as a part-time, as a hobby over a weekend, in the last 3 years, I'm beating them by a lot. Not by intent. I don't deliberately try to see how they are doing and try to beat them, but just by doing what I'm doing and looking back in hindsight, I'm doing much better than them. Okay, so yeah, generally looks all right to me, but just a bit of a concern that it's lagging compared to STI and compared to SGX. All right. Now let's look at my existing positions. Then we quickly go to the questions that people have. I think Irvin has raised one, and my friend Anto has raised another one, so we can go through that. My positions. Let me look at Deutsche Bank. I've left Deutsche Bank, and yesterday was my last day. Now I'm free to center futures. Why there's so many options? Never mind. Let's look at the US one. So I'm free from the restrictions of the being in an investment bank. So, like I mentioned earlier, I have covered the entry rationale for all my positions in the June's market review. So if you are interested to find out more, you can look at the June market reviews. So in the interest of time, we'll just go through the current state, but not go through the entry rationale. Otherwise, it will take too much time. The one that I covered, SGX, STI, and Singtel, I didn't cover those entry rationales in June. So that's why I covered it earlier. So I think at this point, it's pretty good. It's doing pretty fine in my view. But you can tell that there's some underlying weakness in the stock because it tends to react quite badly to news and events and earnings. So if the stock is fundamentally strong, price tend to be stronger in terms of market sentiment reaction, but it doesn't. For Deutsche Bank shares, like during the Silicon Valley banking crisis, price dropped a lot. Yeah. And when I look at this in the bigger picture, it doesn't look like a big turnaround story where you're gonna shoot to take out the old highs. It's more like a good, decent bear market rebounds. I entered here making about 60-70% gain, but it's over 2 years, so it's like 30% gain over a year, and the downside risk is high as well, like maybe around 30-40%. So in terms of risk reward and the time taken, on paper 60%, 70% get over it is quite good, right? Because you are making 30% plus per year. But if you factor in risk reward, it's not such a good trade. It's still good in that this is my largest position. Even today, it accounts for my 30% of my portfolio because I have very high conviction it's going to be profitable. But in terms of actual risk reward, it's not that great. I'm just getting 2 reward for 1 risk taken right now. Yeah. Later on, not sure, but right now. I think it's going to head up to around 24, 25, somewhere here. Then you hit the previous low here. You hit a somewhat a line here. somewhere around the mid-20s, probably you'll see some trouble. Yeah. And I'll exit all my position in the Deutsche Bank shares. Let's look at the weekly plot. So now, price is still behaving well across a resistance line. It's still trading above. It's not dropping below yet. It's still holding fine. But you can see that there's recurringly there's a lot of selling pressure. So if it does, look at this base, right? This is a base, and 1, 2, 3, 4, 5, right? So if I have one up wave, you have a retracement, another up wave, and a retracement, and you have one more up wave, I think I will exit. Because the future won't be that clear to me. If it does go up here in the next few months, I will exit. Yeah, so that's Deutsche Bank. Let's look at FTSE. FTSE, I think in the June review, I was commenting that within the next 3 months, it's going to move a lot. So let's have a look. Thankfully, there's trading view. Otherwise, I don't know how to conduct today's sharing because Yahoo is totally down. I mean, it's the first time I seen it being down so badly. Like you can't even show the chart at all. So FTSE. It's trading above resistance, and I think there's one line that's interesting is this one. Something like that. I already prepared and drew it on the Yahoo one, but it's just not working. So let me try to draw it here. So this line is interesting as well. It's interesting because there's a lot of historical interactions over the last 20 over years, right? And now you can see price breakdown of this line severely, hit it. There's a persistent desire for the price to chase and stick to this line that it has lost. And all the while, you're above some resistance line and you're above a historical high and price is holding steady. What this is suggesting to me is that at some point in the coming months, I won't be surprised at price try to reclaim this line and start to shoot up a lot. Where did I buy? I bought somewhere here. I bought somewhere here, just holding. Yeah, I think it's making around 30% gain. Yeah, I got a 3x ETF. Okay, next. Moderna. I'll try to speed up a bit so that we can have time to cover questions from folks here. Yeah, but so sorry the Yahoo Finance is not working because if it's working, I've already prepared last night the line so I can just straight away explain and go through. But now I have to I have to draw from scratch. Yeah, but that's life. Okay, so the story of Moderna is something like that. Again, refer to my last month's June's review. You have the clear rationale why I enter. So I enter somewhere here, which I thought was okay, but it started to drop a lot. But I can't cut because I work in an investment bank. I can't cut. I need to hold for 30 days. Even it dropped like shit, right? So anyway, it's now it went profitable by a certain margin. Now retrace back. And we draw a channel divider here. On the weekly chart, it looks like it's bad because it failed to pick out the channel divider. But if you look at a longer term time frame, Just say you look at the monthly plot. It's actually okay. This is not considered rejection on the monthly plot because the candle didn't close above and then went down. It just closed just nice here and then retraced back. Right, and if we look at the weekly plot, I'll draw one line and you become very clear what it's trying to do. Just ignore all the other lines and just look at this one line. Okay. Just want to delete that one line. Okay. So this, if you look at here, it becomes very clear. You just take away everything else. Just look at the last 9 months. This is 9 months worth of price movement. So you have a support line, bounce, lost the support line. What happens after losing the support line? Did the price quickly go down or get supported? It seems to be quite well supported, right? You have some consolidation, you try to break down, but it close up for the week. So I won't be surprised this is a forced breakdown to start the next bull move. But of course, if it drop, it could be quite bad here, right? But I'm still on the bull side now. I believe that there's a reasonable chance you'll try to attack the upside towards 250, 300 area. The reason is because there was a clear rejection here. Yeah, if you look at the last month review, you understand more why it's a bottoming formation. There was a clear rejection here, but there isn't any clear rejection on upside. So I suspect you're gonna hit somewhere here to attack this line. And I think you'll go somewhere here to attack this line. Somewhere here. Okay, 200 plus or 300. So my other positions are like gold, oil, sugar, copper, coffee, soybean oil. So these are the other 6 commodity positions. But generally, last month to this month, nothing much has changed. They are all sort of in the easing mode. I don't see a long-term sell signal for them yet when I look at the monthly charts, but they are in a sort of profit-taking mode right now and finding a bottom. All of them are profitable except sugar. And I mentioned last month as well why I added sugar, because I was building a commodities set of positions. So let me do it a bit differently this round. Let me just skip all the review of the commodities position because just really nothing much to say about it. It's just in the profit taking mode, just flushing out the weak hands in my view. Then we're still holding them. I don't see a long-term sell signal. If you're interested, you can have a look at my June sharing. You can see all the entry rationale and why. And the biggest gain was coffee. It went up. It was 200% gain over 6 months. I haven't sell yet because I don't think that's the top yet. Copper 100% gain in 6 months. Like I use a 3x ETF. They call it ETC, exchange traded commodity. But I don't think they have hit the top yet, so I'm still holding. Okay, let's look at the questions here. Okay. Singapore Airlines and Singapore banks. Okay. It's a question from Irvin. Let's look from the YouTube side whether there are any questions. I wanted to stream to the X as well. And I did that for last month and the month before. But this month, unfortunately, I have to stop because they started to introduce for live streaming, you need to have a Premium X account. I'm not going to pay for a Premium X account because I don't even use X. I literally created a free account just so that I can stream and share there. But now I have to pay just to share there and stream there. I thought, just forget it. It's all right. yeah, I can just stick with YouTube and link it. That's fine. There's no questions from the YouTube side. Okay. So let me just change the caption to ask me anything, right? So whoever's here could just post. Let's look at the easier one first. One of my friend was asking about Ondo. It's a cryptocurrency. Seriously, there's so many charts. Which one to choose from? Maybe from Coinbase. So it's a fairly new crypto, right? It started live in January. So my approach is looking at historical prices in the long term and then having a view. But so it's not so good to be applied to things with such a short historical price data, right? But generally, a strategy for trading IPOs or newly listed assets would be you consider the closing price for the first trading day, and then if the price start to move up from there, you can long. The price start to move down from there, you can short. But of course, it's not going to be so easy, right? Otherwise, everybody will be rich. Who's going to show up for work? It's not. So look here. Even if you try to follow this simple idea, you look at the closing price for the first day. If it's up, you long. If it's down, it's short. You'll be whipsaw a few times up and down before you finally got the direction right. And you can lose quite a bit here, but over here you can make back all you have lost, right? Long, short, and long again. Then the gains here would arguably be enough to cover for all the whipsaw trades here if you did cut loss fast enough. Yeah, but I won't bother to try to do something like that. I don't see a point trying to do something like that. I might as well buy something that is like last few years, my hit rate is like 95%, right? 95% of all I buy are all profitable. My only losing position is sugar out of 20 plus positions. So I'd rather not, yeah. But anyway, it can be profitable. Renaissance Technologies, Jim Simons, I think somebody mentioned that somebody wrote a book, and their hit rate is just like slightly over 50%, but he's making 60% gain every year for the last 30 years. Think about that. There must be some serious risk management and leverage strategy they have there. It's just amazing, right? God mode. Okay, back to this. This is easier one because it's just one crypto, right? The other ones will be Singapore Airlines and Singapore banks, and yeah. So you have a field breakdown here. If you look at the weekly chart, it's clearer, right? You draw a line here, you can see a price start to trade below this here, then it went up. Then you have a breakout here, try to test the old resistance line. I can draw it here. Right, you have a resistance line here. They'll break through the line and come back to test it. Then you have another resistance line here. Come back to test it. So I was telling my friend that in my view now, it's a bit mixed. Yeah, it's a big mix because price looks a bit bearish, but the bulls might appear to buy up here. Why I say it's a bit mixed? You look at the weekly plot, right? There's some form of rejection here, go up and test. So on the weekly plot, this is bullish. Right? But if you look at the daily plot, sorry. If you look at the daily plot, let's remove this slide so it's easier to have a look. Straw line here. Look at the daily plot, it's bearish, right? Because in the daily plot, you have something like that. You have a rejection here and you break down. So that's bearish. So it's mixed because the daily plot is saying, the shorter term is saying it's bearish, but the medium term weekly plot is saying it's bullish. So which one will win, right? I would think that if price go back here, it start to trade here again on the daily plot, that means it invalidate the bearishness in the short-term time frame. And it would also sort of vindicate the bullish nature in the longer term time frame. Yeah. So I think you start to have strength again and start to move up, particularly trading somewhere here in a 1.11. Now it's at around 1, right? So about, if it's able to make about 10% gain and just be able to hold that gain, I think it's a fairly bullish asset class to hold. But again, I mean, I won't buy here. If I'm interested in this, I will probably bought much earlier rather than price having gone up from 25 cents to 150, retrace to $1, right? There are better chances to buy earlier. Okay, so in order not to miss the chance to answer Evan's question, let's look at Singapore Airlines and the Singapore banks. Singapore Airlines, I just wonder what was listed in Singapore. C6L. Okay, it's called SIA, right? Look at money plot. Wow, it has such a long history. It's the history is so long that maybe on the money plot you're not giving the rich history enough credit. Maybe you look at the quarterly plot. So what you can see as a dominant lines would be this one. I think it's quite clear that this will be an important line where there's a lot of interactions with this line. Look, all this interaction, and once it go down, pop, and when it hit up again, come down again, right? Let's look at the shorter term time frame. Price hit this breakdown line, but it's well supported, right? Bears are attacking, bulls are not relenting. The bulls are gonna force their way through, in my view. Even if they don't successfully do it here and it might drop here, but I'm fairly confident that the bulls are going to force their way through. You can see all the telltale signs, like sell down, hold the rally gains, attack, bear selling, bulls advancing, bear selling, bulls advancing. So with mama. So it's quite clear to me the bulls are gonna attack on the upside. But the problem is, even if the price trade here, I find it a bit tricky to buy here because your price is like recovering from 350 all the way to $8. So you have already more than doubled, and you might have problem near the historicals high here where people want to take profit. So I feel like unless you have a strong fundamental or quantitative view that is bullish, I personally won't make an entry point near here because it's already past the ideal buy point from technical perspective. Like, where's the ideal buy point? If you just draw a line here, the previous low here, this becomes very clear. You can see there's this previous low here in advertisement in 1999 or 1998 here, right? Bounce. This is quite clear. Bounce, sell down, bounce again. Then here will be a good buy point because it shows that the market is rejecting the breakdown of that previous low. So that's about 420. I will be comfortable to buy here. That was the pandemic crash and recovery. I'll be comfortable buying here. But I wasn't in the market in the 2020. I wasn't in the market since my kid was born, just to staying out, just to try to focus on being a good first-time dad. I only got in 2022 because it was clear to me inflation is gonna be here, and my hard-earned money will just shrink and shrink and shrink if I don't do anything about it. And it's just not being responsible if I know how to make money from the market and I don't put my money to grow by taking up positions in the market. I mean, if inflation is not a concern, am I earning good income? Maybe I don't bother, right? Just hold cash. But staying in London in the last couple of years, the grocery prices have gone up so much. Salary growth is salary growth sadly is negative. But anyway, so it's tricky because even if salary growth is positive, it's unlikely to match up in the rate of inflation and compound like inflation. So I thought I need to come back to the markets again, and grow my capital and not let it be eroded by the inflation and the higher cost of living. Otherwise, just not being responsible. Okay, Singapore banks. Let's look at the DBS DO5. Incidentally, I was making a buy call on DBS last year. So where was that? Where did I share the buy call? It's here. Let's look at it weekly chart. Yeah. Again, this session I'll skip the review of the commodities positions in the interest of time. So we can cover all these which are more interesting. I don't think there's much happening in commodities other than some profit taking and some flushing out the weekends. I'm still holding them, so nothing much. So I was sharing here a buy call. It was around 28. There was a stock split of 10 to 11, so I think it was 30 plus, but due to the stock split now, when you look at the chart, it's 28. So it was here, it's a buy call here. So the price went up, went down, went up, went down, back, go up. Rationale was that typically in a strong bull market, you look at the whole price history, it's actually in a strong long-term bull market for many years. Right. I understand that I'm going to overrun. Apologies for that. But I'll try to cover those of you who have conflicts. Please feel free to drop. There'll be a recorded version on YouTube, on LinkedIn after the event, so you can come back to have a look. Yes. But for those who can stay, please welcome to stay or post any questions you may have on any other assets. So it's a long-term bull, since like the low in 1999. That's the Asian financial crisis. And sometimes when you have such a long-term bull, there's a tendency for price to form a consolidation zone, and that's how I see it. And for price to break out of that consolidation zone to hit the price target before it plummets. So at the point where I was seeing a buy call, it was because there was a indication that price seems to be finding support earlier than expected. You can look here. You can just draw a line here. It's quite clear there's some support here. But can you see that something interesting is happening here? Price is like selling off, but can you see there's some invisible hand that's holding up the price? I mean, it's already selling off so badly. Why can't it just sell off another dollar to hit this line? Right? It just didn't. And even if you try to sell out again with such a strong selling pressure, why can't it sell off another dollar to hit this line? There can be only one reason. Because it's underpriced, undervalued, and the smart participants in the market can see that. So they're buying ahead of hitting an obvious support line. So to me, there's a clear sign to buy. I think somewhere here I was saying maybe it's time to get out because I'm not really sure. And because some people follow me, I don't want people who buy here and end up be a losing trade. They're quite bad. Yeah. So I was saying here it might be time to get out. If there's strength again, can consider buying to buy again. Yeah. But anyway, I wanted to buy this stock, but my manager was out of office. He didn't approve it. And my manager, I sent a request, but he didn't approve it in time as well. Yeah, so in the investment bank, I need to get my manager's approval to buy a stock. And after manager approve, compliance need to approve. Then I have 1 day to buy it, at a specific quantity. And if the day lapses, I need to get approval again. Same for my wife, and same for selling stock. So it's that's fine. I mean, I don't trade often, right? So I make long-term position. That's fine, but still is a administrative overhead. So now, has it reached that so-called consolidation potential? Let's have a look. I mean, visually looking, it doesn't look like it has reached that, right? Roughly speaking, it's maybe just halfway through, right? So it doesn't look like it has reached its potential yet. But sometimes, like what happened here, when you have price having problem hitting an obvious support line or resistance line, it might mean there's something wrong with the stock. But I don't think this is the case yet because it's still quite far away for the obvious resistance line. So I won't be surprised to go up to hit here. But I won't buy it because the upside is just 10% or so, like 10-ish. What about downside? Where will you cut? You might cut if it goes below this consolidation zone. There's like maybe $2. Okay, what 1 to 2 risk reward is reasonable, but I won't buy here because if I want to buy, I will already buy here last year. Yeah, that's where I submit my request to buy. Yeah, but I didn't get approved. But anyway, in the end, I bought I bought the Deutsche Bank shares instead on behalf of my wife, and the gains are even more. Yeah, so I was thinking, I think I shouldn't buy this. I should buy Deutsche Bank shares. I already have Deutsche Bank shares from 2 years back, but for my wife, she wanted to invest some of money. Let me just see any other question. I think Singapore banks. We can look at OCBC, UOB as well. See what they're doing. Maybe we can look at the UOB first. UOB will be the second largest bank. All the banks are the 3 largest market cap. UOB is U11. Yeah. So OCBC is O39. I can still remember them from 2007 when I was more active in the Singapore stock market. SGI is S68. Singtel is Z74. Yenlot Z75. All this stock ticker. Golden Agri E5H. All this I remember by heart. It's just very familiar. UOB. As you can see, UOB compared to DBS is not as bullish in the sense that DBS already gone up of the consolidation breakout, but UOB is just struggling to go out of it. So it might be a lagged play here where it try to play catch up with DBS. Yeah. Let me see. Okay. Yeah. So after the banks, they'll call it a day. Crypto. Like I say, I have a general bearish view of it. You can see there's a lot of selling pressure and incongruence in the various cryptos. Like Bitcoin, you have a tendency for more bullishness, and Ethereum, you have a tendency for more bearishness, and something like Solana, somewhere in between. So I felt like it's not a healthy market. It still needs some form of reorganization, consolidation, selling off to make it healthier. Yeah, I don't feel like it's in a healthy state that is consistent, like the whole crypto space move up. No, it's very selective now. Yeah, I won't try to open trades in it. I mean, I would short a couple of times this year, but I can't short because of my work in the bank. I can short now, but that's true, I can short now. But my capital is fully committed anyway, so I don't have a spare capital to open short position. And I won't want to close my existing position ahead of them reaching their potential risk reward, because you won't be giving a fair room for your position to grow. Although UOB seems to be lagging, I think technically it seems to have a better shape than the leading bank, which is DBS. Remember, this shape is a bit like the Straits Times Index, and you know that Straits Times Index is breaking out. Yeah, so I mean, for somebody with a fundamental conviction, you might even want to buy now. Yeah. Won't be surprised you try to trade somewhere here towards here. It's quite clear. This wolf movement is quite clean in my view. It's you can see the consistent long-term upward drift, as if if nothing happens, price will just drift up on its own. And you have a couple of rejection here, but you have no clear rejection on the top side. So if you have a fundamental conviction in UBS, you can hold. Now it's 32. If you can hold until like a $7 $4, right? That'll be like 25%. If you can sustain a 25% downside, I think chances are you're gonna get at least 25% upside from here. Yeah, I mean, 1:1 is not that great, but if you have the fundamental quantitative conviction, why not, right? You need to compare against what other assets and alternatives you have with your cash. Yeah, but this seems okay. Yeah, UOB seems okay, but DBS. DBS seems I don't know, it looks fragile. Look at this shape, it just feels fragile. Whereas UOB seems to be more steady. Let's look at the OCBC, the third largest bank. Okay, there are no more questions from the LinkedIn side. And just to confirm, I think there should be no more questions from the YouTube side. Then we can call it a day after this OCBC. Yep, nothing from here. Great. We'll overrun by 10 minutes, but OCBC. Let me double check I got the question correctly. Singapore Bank similar. Okay. UOB has a nice, OCBC has a nice consolidation here, and then there's a breaking out of that consolidation. It's quite nice. Right, so you can see that there's a dominant line there. Let's try to extend this line further back. Oh, it's not bad. OCBC is not bad because you can see that. Okay, I don't know how to draw. I want to draw I just want to draw a circle. Yeah, but I'm new to this, so I don't know where to find the circle. Yeah, here. Just draw ellipse. Okay, so you can see here there's a quite a clear rejection of this dominant line, right? Pop, and you have a big fall from 14 all the way to 850. And what's happening here? Price is disregarding rejection. Is like, I know the bulls try to, the bears try to attack you, but I'm gonna heck care you and I'm gonna push through anyway. I'm gonna disregard your bearish view and commitments and positions and short. I'm gonna push through anyway. You can see the kind of conviction there. So undeniably is bullish, but you buy now is like buying at a historical high price. And sometimes what happens is that you could end up having a double rejection and then price go down for very severe fall. That can happen. So I think technically it's bullish, but if people are buying here, will probably buy here with a cut loss somewhere here. Your cut loss will be $2. Your upside will be more than $2. So at least a one risk reward. But I would start to buy OCBs now. I mean, if I want to invest value, I would maybe during subprime I'll buy here, right? Why I want to chase when it has gone up so much. So yeah, probably not buy now. Yeah. Let's see STI. Here. STI is a bit different because it's still sort of fair to be buy now because it's a very long-term sideways consolidation. So what this means could be, it could be possible that STI goes up, but the one that's pulling up the index might not be the banks or all the banks. Maybe some of the banks, maybe some like Singtel, maybe some like SGS and some of the second and third tier index components. It could be because it might well be the banks are pulling up as well, but I don't see the banks as having particularly nice risk reward. DBS looks fragile. UOB looks pretty good. OCBC looks interesting, but there can be a chance of a second bear attack. Yeah, so I'm not that sure. Maybe out of the three, I think UOB seems like the most safest to buy if really somebody want to buy a Singapore bank. OCBC look interesting, but if the broader market is weak, you gotta push down hard, very, very, very hard. So the downside risk could be a lot if you don't cut. So I think there's room for attack there, which the bears might want to take advantage of. So yeah, maybe not. So if really, really want to get into a Singapore bank, I think UOB probably would. I'll buy UOB. But again, I won't buy now. But if really, really, somebody want to buy a Singapore bank, I think UOB probably is the safest bet. in terms of the price movement. All right, I think that's all the questions. That's it. See you guys next month. And the next month we'll do it. I think it's the Monday is quite clear. I think it's 31st August or 1st September. It's right at the month end. For this month, we're doing on 27th, so there's still 3-4 trading days before end of the month. So we are not seeing the complete picture yet of the market or in terms of the month end view, but it's good enough. Yeah. Otherwise, if we do it next weekend, then we lose a few trading days. Then it might be too late to make decisions and make positions based on the views. All right. Thank you all. I'll see you guys next month, in the late August. All right. Probably 31st August or 1st September. Yeah. All right. Cheers.